Hello everybody, alright. How we doing? Hopefully everyone's good. Man, I gotta tell you, what an adventure I've been through with some videos. I'm gonna give you guys a quick story if you don't mind, just to start. I mean, basically, I explained a little bit of this on Discord, but I went through a process where we tried to do some live streams, found out I have a internet issue with my upload speed. So I'm correcting that issue. I'm gonna get a new office not too far away, a second office, which is fine. I guess something I was thinking about doing anyway, which is good because I don't like this idea of this internet issue, which very strange to begin with. Doesn't even make a lot of sense why I could have faster upload speed on my phone than these guys can provide me. Regardless, I'll try to get that done as soon as possible because I want to implement a live stream as soon as possible. So ultimately, I would like to make sure that at least by the end of the month, if not sooner, I can do that. Don't hold me to it, but I'm going to try my best because I want to start to get into some interactive things. That's always been the idea. I can still do that, obviously, on smaller scale, but when you're broadcasting it, you need a little bit more bandwidth on the upload. But regardless, that's a whole nother story. What happened is that I went through the process of trying to upload a live stream, and it came out, some of you guys watched it, some of you guys said it wasn't so bad, which is nice of you. But ultimately, the quality was bad. You would basically get a big mess in here when you're trying to watch it. And what I did is I went ahead and I made a couple videos. I made a market update and I made an intro to the moving averages video, and I was also dealing with a huge sickness, right? So I did that, and then when I went to upload it and started to watch, I seen that the quality was terrible. 100% my fault. I didn't change the settings. I had to lower the settings to try to stream in the first place. Didn't change them back. That was my fault. And then to compound the issue, when I changed them back, somehow I added an extra digit. So let's say your bit rate's supposed to be at 12,000. I might have put it at 100, or maybe it was 14,000, whatever it was. Instead of 14,000, I might have put it at 140,000. Or if it was 50,000, maybe I put it 500,000. I don't remember what the exact numbers were, but here's what I know. My videos, instead of being normally around half a gigabyte, were over 20 gigs. So this created an issue where the upload took forever. And then, for whatever reason, good old YouTube never processed my videos. I'm going to show them to you real quick, because I don't want you guys to think that I'm just coming up with a story. Not that you do, but let's just give you an understanding of this, right? So, intro to moving averages, right? Market update, nothing's clear. So here I am, I uploaded these videos, but the processing of them never cleared. Just never happened. So anyway, long story short, I'm having to redo them yet again. So I guess I'm going to become an expert at making moving average videos, because I'm going to have to do that literally for a third time, and that's okay. That will be done tomorrow. Regardless, basically what ended up happening is I uploaded it. That took forever. Literally it took a couple days for the upload time. And then normally what occurs is that YouTube goes through a processing on their side. And I guess because they were just so large, they never processed. At least the intro to moving averages would pop up and show me at least a picture of it. Whereas the market update literally shows me nothing at all. I mean, it shows me like a blank screen. It just said processing, 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 and then they both just stopped. So I didn't get a letter from them. I couldn't get any clarification. I have a trouble ticket in just in case, but reality is I'm just going to redo them. So redo this market update right now for you. Hope you don't mind my little quick story, but I just wanted to give you guys some understanding. You might be able to tell, by the way, one good thing is that through those videos I was having to hit the mute button all the time because I was coughing left and right. Feeling a little bit better. Actually feel a lot better. And my coughing's a little bit down, so much so that I might just cough right on you instead of hitting the cough button, because the cough button has some issues of its own. But regardless, let's start. Go ahead and I won't even try to just go into what I talked about before. I'm using this BLX because they got better history, and I'm going to look at something like a 3-month chart to start. Market update, where are we at? Can we use anything like a moving average of any kind? On a 3-month, we're pretty far out. I mean, what I would try to show you is, I do want to show you something interesting, right? If you guys are familiar with this price action channel that we utilize, and basically, what do we know about a price action channel? We know that when price is inside the channel, things are kind of like a ranging motion on that time frame, right? And when they're outside, it's trending, right? So, we had a situation where it trended out. These are 3-month candles, right? So at scale, do you expect significant periods of time? No, you don't expect gigantic advances outside of the channel, but if you notice, even being outside for the better part of 3 to 4 candles, this is about a year, right? So you're talking about 9 to 12 months there. Then when we had our amazing run, when we jumped out, we're talking about 3, 6, 9, 12, 15, 18 months, 21 months, the better part of 24 months before we got back into channel. 1, 2, 3, 4, 5. Think about what I'm telling you. Each candle's 3 months, right? So you're talking about, who knows when we re-entered, let's say definitely 9 months, 10, 11, 12-ish, about a year now in that channel. But what's happening? One thing that is very interesting, in my opinion, is that, look, this price action channel, right, which has been used for 40 years. I didn't invent it, right? So ultimately, this is something institutions look at, etc. It does give me some insight as to why we've been holding these levels, right? Because there's a little bit of float characteristics going. We have the 200-week moving average, which is big boy technical analysis, right? So we have that, but we don't have that horizontal support that we're like, oh yeah, exactly, right here, this has to hold. Of course it's holding here because of this support or anything along those lines. We have some stuff. We have the monthly 55. We'll talk about that when we get to the monthly scale. But ultimately, this is interesting to me because a close outside of this channel tells us what? Think about that for a second. What has it always told us? Right now, there's not a lot of history in Bitcoin, so we have to take that into consideration, of course. But man, any flex outside of this zone, we could zoom in if you want and look at history. Ultimately, you're in, you're in, you're in, you're out, you're out, you're out, you're out, you're out, you're out. In this case, most of a year, the better part of a year. In this case, back in a little bit, the better part of a year out. Back in, for a good amount of time, and then we just talked about it, right? 18 months or whatever it ends up being. So man, if we get outside on a closing basis, this price action channel, woo! I mean, it's got to be bad. I mean, ultimately, we would need a scenario like this where you're wicking down and getting back in before the close of this candle, which closes March 31st, right? So that's something interesting to watch. If not, we watch the next 3 months, because I know a lot of people, they got targets. It's understandable. Some people have that target at 2,600. They got the target at 2,400. Some people have the target at 1,000. The reality is you lose this on a closing basis, on a 3-month closing candle basis. Woo! Now, all of a sudden, this type of stuff becomes reality. Where, in my opinion, if we talked about that over here, I know I do bounce back and forth. Probably everyone does in that kind of long-term analysis, which is fine. Don't ever worry about changing long-term analysis, because look, you're not supposed to be able to predict the future, right? I know we do it on occasion. Sometimes we get it right. That's great, but you're not supposed to be able to say, hey, it's going to do this, and then it's going to go up, and then it's going to go down, and then it'll go sideways, and then it'll go down, and then it's going to jump up. I know people do that. You think they're a genius. They guessed. It was a solid guess. Maybe it was based on something that made some sense. Good for them. But if I do it and get it right, look, it was an educated guess that went my way. You don't have to think I'm a genius or anything along those lines. So, same type of scenario here, but what I do know is closing the month, the 3-month candle outside of this price action channel, basically what that's going to introduce is a level of pain, quitting, etc. We'll talk about that more in a minute, but I'm going to try to roll through. I don't want to make this the longest video in the world, but I just want to talk about that because that 3-month candle that I don't usually use a lot in crypto because we just don't have the history. Love it in Forex. I love it in stocks, things of that nature where you have the historical value, the ability to take a look and just make sure, hey, is there anything going on here? A lot of times you're range bound on it or something like that, which is fine, or it has clear skies. When that happens, it's easier to see that, okay, nothing doing, we'll see if it pulls back, etc. But in this case, there is some substance here. You don't want to lose it. I'm going to show you the same thing on the monthly. Let's switch to a monthly. Another thing comes in that's interesting about the price action channel. The price action channel here, same thing. We know, we talked about it. We got outside of it on a monthly scale, rode it up during this epic run, back inside, right? So what do we say? When you're inside, you're contained, right? Contain, 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 compression. And we see that. And finally, that compression led to a breakout. And what happens? You're now outside of this price action channel. And you wouldn't be back in until you closed above, guess what? Resistance. That huge resistance that we all know about right there. And it just happens to coincide with the price action channel. So that's intriguing. It's very intriguing because ultimately it's basically a situation of where are we? Where do we stand? Where are we going? We're going to find out in time, but this price action channel is telling us a lot because at the moment we're living under it. And what we know from history, being outside is a dangerous place, right? So you go back to the old bear market, previous bear. What happened when you broke down? You were under it. Yeah, you snuck back in, couldn't really close in, so you were 1, 2, 3 months, 4, 5, 6, 7, 8, 9. Let's say 8 months, let's say, if we say that one snuck back in. And then he kind of danced and played around, hanging out basically inside. And then once you got in, you were riding up all the way for the entire bull market. So it's basically a good indication of a time frame to say, hey, on this time frame, are we trending? And are we uptrending? Are we downtrending? Clearly downtrending, right? We didn't need the price action channel to tell us that, but it's a very simple tool to utilize to let us know that, hey, on a monthly scale, things are super bearish until you're inside this price action channel again. So it's something to keep in mind, and until we get back in there, we can see how it can act as resistance as well. You know, it's hard to kind of jump back in. It's not to say you can't just leap back in. Absolutely you can, but you can tell that, look, it had a problem here. It leaped in and then rejection, right? And that rejection costed time. See, time is that huge element of the market that we don't talk about a lot. And what happened here? Tried, rejection, and the time that it cost was 1, 2, 3, 4, 5, 6, about 7 months. 7 months of bear market because of this rejection. Okay? All right. So that's where we're at with the price action channel. Let me just see if there's anything else I need to see there. I will bring up some of these indicators in a minute just to kind of get an idea. So look at this. This is stochastic. If you don't know anything about it, maybe I'll talk a little bit about that in a little bit. But monthly stochastic is terrible. Can we get anything from a 3-month? Not really, but terrible also. I mean, this is terrible. Not good, but that candle's not going to close till the end of March, so we're not going to worry about it right now. We can see that it's just ultra bearish. This is ultra bearish, right? When your stoch is, if you know, I'm going to teach stoch eventually. What I do is, you know, I give you portions that you can use by themselves, right? So you don't have to, you don't need stoch to do what we already have learned. We basically try to give you some pieces to say, hey, you could just use this, and if you learn this to a significant degree, you're going to be fine. And then we'll slowly add some of these little specialty items that you can choose to use or not use. But you'll learn to use it effectively, right? And then decide, you know what, do I want to include this in my analysis? Do I want to include this in my trading plan, etc.? And we'll get deeper into that. But so here's what happened. What do we see? Very quick lesson, actually, I will tell you. Only thing I care about with stochastics, this is a standard stochastic, which is like a 14 period. I don't care about the signal line. The blue line is the stochastic line. Obviously, I'm not going to break down a teaching right now, so if you want to look up stochastics and understand the basics and who made it and those things, feel free. We'll get into that later, but ultimately, I don't care about this trigger line of, oh, it's crossed the trigger and up the trigger. For me, with stochastics, I rather SMI, which is another indicator, to get some more specifics like that. But with this specifically on the stochastic, I care about the actual stochastic itself and the 80 line and the 20 line. Okay, downward cross of the 80, concerning, right? I shouldn't say that. The 50 line matters too, which I'll explain. The downward cross of the 80, bearish. An upward cross of the 20, bullish. Now, does that mean you buy? No, it doesn't mean you buy. It means you're concerned, right? So when you hear me, the reason I'm bringing this up, and I'm going to switch time frames on you, when you hear me say, don't hold through a retest, I'm talking about, I'm not going to switch time frames because I'm on this long term, but let's just act like this was a lower time frame. If this was a 4-hour chart and I had this cross this 80 level here, I'm concerned. I don't want to hold, right? Because this is going through what we call a retest. What's a retest? Well, you got a cycle. It's cycled up. It's cycled down. Eventually it'll cycle up. It cycles down, right? And I'll show you again on lower time frames so it makes more sense, right? But ultimately when I get that cross, can it recross? Absolutely. It could go from north of 80 to south of 80, which I'm concerned and watching, right? If it goes back north of 80, hey, that could be super bullish. That happens a lot. But what I don't want to do is hold through the entire reset. So let's say my trade is on a 4-hour scale. Do I want to hold this? Remember, I know I'm on a monthly. Act like it's a 4-hour. So do I want to hold this through this entire reset? No way. Why not? Well, because as I progress here, forgive me, as I progress here, you're basically putting yourself into a position. A lot of this is going to pop up. I'm doing a test on something. So as you go through this progression here, you end up putting yourself into a position to where you're creating risk. And again, I'm going to bring this up again on the lower time frame because it's not as obvious. Sometimes what happens is you'll have a reset and the price kind of flatlines, doesn't do anything. So that's fine, but there's still that risk during that time, because when you get below 50 and when you're living down here, a lot of people see this as a possible bullish opportunity. Hey, look, stochastic is oversold. No. Stochastics is in the danger zone. This is what this is. This is a danger zone. Ultimately, there's no way I want to hold anything while stochastics is down there. I'm not trying to catch actual bottoms. I'm not trying to catch actual tops, right? So that's what that is. And hey, you could look like a genius, but you can also put yourself in a significant risk, because here you are skating here, and maybe you're thinking, hey, it's going to pop up, and then because you're actually in the danger zone, boom, you get those big drops. Again, when I get to a lower time frame, I'm going to explain that a little bit better. I just wanted to give you a glimpse of it, because it kind of shows you here. If you were smart enough to get out, even on this scale, you might say, whoa, I don't want to hold this because I just lost that. Now we know, hey, that's a significant drop on the monthly type scale. But you could see what then occurred, and then gave you no reason ever to re-enter on that scale. No way, right? So that's just a brief introduction to kind of something like stochastics. You don't have to use it just yet if you don't want to, but I do talk about things like resets all the time, and that's actually what I'm referring to. And you can have a reset on stochastic, you could have a reset on your MACD, you could have a reset on RSI, which would just basically be a pivot like this and a pullback, and then you're waiting to see where's it going to pivot again and start an uptrend. So there's a lot of different ways you can communicate that. It's just not one specific set. I know sometimes that can be frustrating with trading. Say, oh man, you guys talk about these things, who knows what they mean? I get it. Now, while I'm on this monthly, what do we see here? You know, we know this is obviously a resistance. We talked about that. It coincides obviously with the price action channel. It coincides with this particular candle. We know what we're dealing with. We're dealing with obvious significant resistance at this level. If I bring this back up, I have, did I absolutely erase this? I probably did. Anyway, let's go back into something like am I on the wrong chart? That's why. No, I'm not on the wrong chart. I just erased it. My apologies, guys. Here we go. Let me just bring that up. All right, so that's a 55 EMA. It should be white. I don't know why it's blue. And this is a 50 moving average. I want to show you this also, because we talked about 55. You know, breaking down below the 55 on the monthly was bearish, right? But one thing we got to consider when we get into pairs like the 50, you know, people like to use the 50 simple moving average. People like to use the 50 exponential moving average. We have to be aware of both. Even if we're proponents of the 55, you know, we like the 55. When you get in that range, you do kind of have to bring them both up and kind of make sure that, all right, if it broke yours, which is the 55, you want that 50 to be broken as well. Otherwise, you kind of have like this zone which was getting squeezed out, and it actually rebounded above the 55. So this is something the bulls can kind of hold on to a little bit here at the moment. So we want to look at the positives as well. There's a lot of things on lower time frames that look terrible, which I fully agree with if you go back to the last week. But if you look at this here, look, you're living above a serious moving average. Now, is it flat? It's flat. Would you rather it look like this? Yes, you'd rather this having some sort of upslope so that you can basically bounce off and know also that it would take some work to move that 55 around. I'll get into that in a minute. But on a monthly scale, if you want to hold on to something, hold on to the fact that you're still living above that 55, and there's a security blanket of that 50, which coincides with the 200-week moving average that you know has been something that's been tested a few times and has held to this point. So we don't want to forget that. Just want to bring that up. I'm going to take that off for now. What else do we want to talk about? You know, things like monthly opens, monthly close, they matter. We're in a position here where, you know, you're above that December open. That's good. So, you know, it's a pretty good spot on a monthly basis. I understand the people. Actually, I haven't really heard anyone talking about it, but anyone that would say that, I would understand that. Hey, there are some elements on the long term, on the higher time frame, that are okay. In all honesty, I'm going to look over here at something. The other issues on the higher time frame, you know, if we're gonna just break down, would it make sense that this is at 36? Well, I'm going to give you a couple examples. This is a 36 range, and the market did break down after that. Not only did things get more fearful, normally when you see the fear drop like that, that means the price dropped, right? So, in fairness, being at 36 is not the same as a few weeks back, which you guys might remember, which was over here, where I said, I don't see us dropping really from here because we're so low on the fear index, right? Look, there's room. You know, and you could even look at things like a pattern and say, hey, maybe that's a head and shoulders. Maybe it is. I don't know if patterns work on the fear and greed index or not. But what I do know is that 36, yeah, it's fearful. You're not expecting a massive drop at that point, but it's not out of the realm of possibility. So in this video, I'm going to tell you straight up that I'm not giving you a lot in terms of direction. I'm just talking about both sides because things they're just not crystal clear. You know, there's elements on the high time frame that we have to respect. Yes, the price action channel, very bearish. The moving averages, holding on, right? So, you know, would I like to lose this 55 again? No. Now, when I go to a daily, I'm going to change my tune a little bit, and we'll see what we get on the weekly as well. But let's go to the weekly first. Now, something interesting happened here in the last couple weeks, right? We snuck back into this price action channel. We tried to jump out. You see, I'm giving you a lot of price action channel today, right? And that's my fault. It's something I should have been looking at and thinking about and talking about as well because it's so basic. But, you know, the reality is we tried to sneak back in. It didn't really occur. Couldn't get in. Back in. Tried to get out. Come on, buddy. You're getting too aggressive, right? No, it's taking some time. And you're getting consolidation. You're getting a squeeze. I'm going to switch my chart because I was on this BLX specifically because they got good history. And once I get to this daily, I don't need the history as much, so I'll probably switch to something like, let me go look real quick on this other screen. Problem is that they don't have, you know, the low time frames on this chart, or else I would just keep it. So I'd rather get to something more specific. And make sure I don't have a big giant research going on. I don't even know. I might have to change a few times on you, but let me just go here. We'll do this again. Alright, this is fine for now. Okay, so ultimately what do we have? Into the price action channel on the weekly scale, right? We know that this here, I have that drawn because I'm sure that is the 200. Yes, it is. That's why I had that there. So this was that last time that we touched that 200, which is right there. 1, 2, 3, 4 tests so far, the 200. 200's been the saving grace. There's no doubt about it. But we want to look at the 200 EMA, which is this guy, right? I'm going to get rid of the price action channel for a minute. I know I'm moving fast, guys. So what do we see? 200 simple, saving grace. 200 exponential, resistance. So you got that squeeze going. Who's going to win? You don't want to lose this 200. If you're a bull or if you're a bear, you don't want to lose the 200 exponential either. So it's very interesting. You know, a lot of people just aren't talking about any type of bullish option. I'm not going to eliminate that. That's how you get a bias. You know, I can't create a bias. I can set myself up to a position to say, hey, I can see some scenarios where getting a play up here, I might play a short, etc. But the reality is, this is clearly a fight between the 200 EMA crew and the 200 simple crew. There's just no doubt about that. And if we take a look at where we stand between those two, we're basically, you know, we've been living right in that middle ground. This is a weekly scale, but at the moment you're a little bit lower than it. You know, so that's bearish. You know, you want to regain that mid 3700 region to start feeling a little bit better. And I can understand why on the short term things feel a little bit more bearish, and they should. I get that. Let's see, weekly scale, that was my 100. I think I want to move to a daily. On the weekly, we know everything. We know where the resistance is. We know where the supports are. We know we're basically in the middle. We know that we have a clear consolidation of some sort. Where those lines are, I don't know, right? Are they here? You know, with geometry, when I say geometry, when you're drawing lines, look, when you go back in time, it's easy to do, right? When we go back and say, oh, look at this. We know what this was. This was a descending triangle. Okay, but in the action, these can morph, right? So, you know, we might find out that, you know, ultimately, let's say we come and create a closing high of a week right there, and then it comes here, and we have closing high here, and you had you know, you find out months down the road that really this was an ascending triangle, and it breaks out. Anything's possible. Who am I to say that I know? I don't know. I'm evaluating. That's what anyone should be doing. They should be trying to make a good evaluation of the circumstance, keeping their minds open to possibilities, right? You might remember day one of this rally. Moment one, Sunday night, we started to see it rallying. Monday morning, I was talking about the rally. The very first thing I put in a post, and we can easily go back on Twitter and find it. If you guys want me to do that, I'll do it for you. I said right here, keep in mind this, you know, obviously we're advancing now. This could be a wave 4, right? Which is basically, if we're talking like Elliott wave type structure, you know, it could be a wave 4 of 5, meaning that yes, we might roll up, but then eventually get that fifth link down. So that's still in play. This could easily be a gigantic bear flag, and I say gigantic because look, we're dealing with it for a few months now, right? But on scale, you know, ultimately that could be a bear flag. You break down, we see what happens, and kind of go from there. But there's just a lot of interesting things about this because it's creating that scenario. I know I said it earlier, I'm going to repeat it, to where I'm noticing, you know, things on like the price action channel. If you close March under that price action channel, under that 200 moving average, suddenly you're starting to reset this whole process. You guys remember what took place here when you lost that 89 week moving average? I'll show it to you real quick. A bunch of things are going to appear on the screen, so don't get overwhelmed here. Where's my fan? Okay. Alright, so that was this guy, the yellow guy right here. Just focus on the yellow guy here. Remember, we talked about it. This breaks, we're in trouble. This breaks, we're in trouble. What happened? It broke. Not only were we in trouble, I mean, we just flushed, right? What a flush out. And then really what happened, because these are weekly candles, it tried, flush. It tried, flush, right? So ultimately, look, you become in danger of creating another scenario like that. I know there's certainly the possibility of this guy, which would be awesome. This would be great. Bounce, wave 5 down, right? Try to correct a little. I'm talking about in the same week. You know, even the same day would be good, right? Where you get something like that and just get back to at least where you were, where it's like, all right, we went down, we kissed this area, there was clearly buyers there, and then you see something like that, and you start living, you know, in what we would call, let me try to lock this. Yeah, it's not going to let me. Okay. So regardless, you know, you start doing one of these numbers, that's like a sign of strength, right? When you get into an area, it's like, all right, so now we got a sign of strength, and then finally clip over this area. Then that would be nice, you know, but as nice as that would be, the break itself, it's not something I would want to play. You know, I don't want to be involved in trying to catch that at all. Because if you're not smart money, if you're not the guy who has already said to its billionaire friends that, hey, we're buying everything at 2,400, 2,600, or whatever it might be, then great. If you're not in that crew, you just don't know. Who's to say that that's going to happen? The reality is you're going to create so many weak hands. I apologize for coughing. So many weak hands that you have the risk of this whole thing happening again. And for me, that's too much risk for me to play. If this thing breaks, I'm going to be watching. Might I try to jump in on low time frames, have some fun? Sure. But I'm not going to be confident about anything in that scenario. And the guys that are confident, good for you and your confidence. That's for clicks. That's for, you know, followers. There's nothing else to that. These guys don't have crystal balls. There's no crystal ball that says, yeah, I can play out a scenario that says, hey, this is a possibility. But to say that I have I'm going to throw, what, 6 figures on it? Come on. No, of course not. That's ridiculous because that would be totally irresponsible. Now, might I get something, start to see a sign, a little bit of an uptick, throw a big position into an intraday move that turns into something greater? Absolutely. That's a different story. But it's something to think about. So, higher time frames, right? Not so bad, right? Here we are on the weekly. We're not so bad, actually. We're in an interesting position. You know, if we forget the top end, let's just look at the lower end, look at closes. All right, well, maybe, you know, maybe we kiss this area and we kind of have to see, wait and see. You know, that might coincide with like a 0.38 and go from there. I don't know. You know, maybe it's, you know, ultimately we have a couple weeks here. If we go even real high time frame again, if I look at this monthly, we're really intra-month, right? Look at this. For now, 4 months. If you ever do a candle count, if you know what that is, if not, don't worry, but this would be like a 1. And because these are intra-months, that's still a 1, that's a 1, that's a 1, right? If you do candle count. Because basically this is just time, not a new position, nothing advanced one way or the other. So this would all be part of the same exact position. There's trading systems that work that way as well. So the idea behind that is to point out that, hey, we got to accept the reality that, yeah, okay, could this be a bear flag? Absolutely. Is that the most probable scenario? Maybe it is. You know, it's more likely you're in a bear market, right, to be a bear flag of sorts than anything else. But does that not mean that we can't identify the fact that so far you have a slightly higher low? And I say so far because that could be taken out. But at the moment, you have a little bit of a higher low, right? You didn't make a higher high, that's true. I mean, I guess you did on like a daily scale, you could say that. But, you know, in reality, and it depends on the exchange, but Could this be a head fake? Yes, but it also could be a situation to where you're building on something, and I'm going to tell you guys, I'm not going to act like there's no possibility of us making some run into here. You could have a head fake into there that then flushes everyone out. So that could be still a bear scenario. You can have a scenario where you break out and get into these higher time frame, some of these higher moving averages, absolutely, right? You can have a scenario where you have a big break and do something like literally like this. Yeah, it doesn't, I forget the timeline, but just in general. I love how people are like eliminating, like it's not possible. Now I agree that this would be a headache for sure, but you know how crypto Twitter is, man. These people get bullish, right? And they get it quick. So is this likely? No, none of that's like the most likely scenario at all, but a lot of times it's that path of least resistance, which also means the path that is least expected is the one that comes into play. All you would need to start to see is all of a sudden people get overly confident that things are super bearish. Now, do I see that type of move right now? No, because I don't see the short numbers, right? I would expect to see, you know, I got something like this, longs and shorts. You would expect to see the shorts just skyrocket relative to the longs, right? And that would be fuel to basically allow you to burn the type of fire that gets you there. So I just don't want to throw out any options. I want to leave it on the table so that I'm not just standing there like a deer in headlights if we start to see some bullish opportunities, okay? So anyway, that's that. Moving on, I'm on a daily scale now. We're going to watch. I don't like, here, let me show you what I don't like at all, right? This is the longs and shorts. You know, it's not terrible. It's not giving you clear signs. It's certainly not giving you super bullish signs at all. So we'll have to wait and see what plays out with that one. But the things I don't like, I will talk about this. So this is the 100. I'm going to get rid of this 200 right now. This is the 100. And when this was occurring, we hit this day. One of you guys asked me a question on Discord, and I mentioned that did I expect this to just stop? And I said no, I don't expect that because the momentum was pretty significant. It kind of played out that way. I was fortunate enough to catch that, and we got a great signal in here to get out of your position, and maybe even a signal to re-enter a short if you were liking that. If you didn't, don't worry, you definitely got an exit, and I'll talk about that in a minute. I actually spoke about that on 2 other videos already, but neither one of them got processed, so let me relive that with you. But ultimately, what happened is this. I did mention this. I did say that, no, I didn't expect us to absolutely dump here at this 100, but I did expect us 100% to revisit this 100. And we can go back on Discord if we need to review that, but take my word for it. That's what I stated. And why? Look at this moving average. This is a big moving average, 100 days, right? So it takes a lot to change this guy over. You're not going to go from this guy going like this. They don't V. 100-day moving averages don't V. They circle, right? They kind of flatten out. And by the way, it could easily flatten out and then turn back down, right? Give you an example. Let's look at something like a small scale. You know, even this is a 55. The 55 takes some time. See how long it took just to flatten out here? I don't like losing this 55 at all. But when you get into something small, the green is an 8. Well, the 8 can just change directions, right? Boom, boom. See how that works? No problem. But the 100, different animal. This guy takes some time. So, you know, I'll probably make a little video for the public. You know, and I'll show you guys too. But there's something called mean reversion, right? So with mean reversion, it's a pretty simple strategy, but it's a very... it's a strategy that allows you, and by the way, the mean reversion strategy that I would teach wouldn't have worked here, and I'll explain. But basically, that strategy tells you that, hey, you could pick a number, something like the 100. You can even use the 55. And a very short process of how mean reversion looks is that if you're making a pass through it, and you have a moving average that isn't showing, you know, significant capabilities clear signs of reversing just yet, then you're going to revisit that moving average, right? So in this case, the 100, now the signal would be you would hope to get a nice little bearish candle at the top, you know, something like that, or something, the doji indecision candle, or like what the S&P put up on the hourly first thing this morning, but something like that would give you the opportunity to then get in for that mean reversion. So that didn't happen here because, yes, it reverted back to the 100 as we expected, but what it didn't do was give us a nice daily time frame signal to go ahead and jump in. But there were signals here, and I'll talk about that. But the point is that at the moment, you're just revisiting this. And again, the bulls can hold on. Now, what you don't want, in my opinion, you know, you lost it here intraday, you regained it. You know, you lost it here. You know, when you lose these things, you lose them pretty clearly usually. You don't want to lose this. You regain this 100, you don't want to lose it. It's not a good sign to do it. The other thing I don't like at all and that's happening today, is this. And I'm going to show you. This is, don't worry about the Bollinger Band. I'm going to go ahead and just show you this 20 period moving average. Usually have that blue, but regardless, this is the 20 period moving average on a daily scale, right? I don't like that we're losing this today. This is a bearish signal. This is probably the most bearish of anything that I've noted so far, and I'm going to tell you why. Just historically with Bitcoin, right? Let's just utilize nothing but this blue 20. This is just a 20 simple moving average, okay? So what do we notice with this 20 simple? All right, well, what we notice is when you lose it or gain it, it tends to hold for some time, right? So here it was under for a long time, weeks, months, terrible drop. And then finally regains it. And what happens? You're talking about, let me get my little counter up here if I can find it. Where's it at? Oh, it's right here. Okay, so now you regain it, and you're talking about, this is just a test, it holds. And it holds it here, it loses the next day, 20 days that it held. All right, let's look at this one. 20 days, well now it lost it. Down, down. See what I'm doing? It's under this line, right? So as long as it stays under this line without breaking it again, which it breaks it right there. So let's say 35 days, okay? Well, now it's above it. And what happens? It stays above it. 25 days, loses it here. Now it goes through about a 3-period test. So I won't even consider it losing it until it loses it, which is there. You guys are getting the point, I think, though, right? So here you go. You lose it. And till about, well, really, it's still broken. What am I talking about? This one's all the way down, really, until here. So 52 days. Now, granted, it's a bear market, but you've seen even during the bear market, those bullish runs were significant. So here, this is a short one, but even at being short, it was, you know, the better part of 7 to 8 days. This one, another short one on the bear side, and it only lost here about 4 or 5 days. So there's some hope that, hey, maybe you just get one of these short runs, but for the most part, you see it holds, you know, 10, 15, 20 days, 30 days, 50 days, right? 21 days. I'll just keep doing it. 12 days. These don't have to be perfect, but you guys kind of get the idea, you know, another 17 days, 15 days once it was broken. Now again, at least holding above that level, 11 days, etc. So you get the point, all the way into recent times where right before we dumped, we lost that 20 on the daily scale, which was a bad sign, bad omen, and we lost it until there, 39, about 39 days, I'm off by a day or two, don't worry. Held it for about 22, 23 days. Then again, lived under it again for another 29 days. I know I'm trying to really get this point across, but at the moment, till today, we're about 23 days above it. And at the moment, we got a little less than 2 hours until the close where you're going to lose this thing. And just looking at recent history, the most recent scenario that we had, the best scenario we even found was 5 days living under that 20. Now, what's positive? Well, it is an upsloping 20 at the moment, so that's helpful. You know, you got a little bit of support here, you got a little bit of support here. We know about the higher time frames, but man, on a daily scale, that's the thing that scares me the most. This is, in my opinion, at this moment, the bears that's their biggest, you know, feather in the cap, so to speak. Then you look at something like this 55. You had it, you tried to hold on to it, same thing. It's breaking today. I don't like either one of those. So one play, if we're going to talk about a play, I completely understand a play that if this is able to hold, and we see kind of a weak run up into this 20 or 55 even, but maybe back into that 20 where it can't close back above it and fades, you know, by the close, meaning tomorrow, the next day, something like that. If you're granted with that kind of benefit, I understand people shorting. You know, we also had a gap over here. I was playing, I'll tell you flat out, you know, I was hoping to get a run somewhere into this 3900, 3930 type range so I could fade that on a short and try a short that way, and it just didn't come. We didn't get that much of an advance into the 3900, was the most that we got. So I haven't been able to exercise that game plan at all. Now some will say, well, we had a 20-50 cross, which, you know, we'll be learning about this kind of stuff this week. Can that be bullish? Yeah, it can be bullish, right? But the key to that also is that you want your moving average chasing your price. So yes, if it rebounds, there's a bullish case here. So it hasn't rebounded, but if there is something to see, If we start to see a rebound of some sort, and this gets back above the 20 on a closing basis, then you can try to say, hey, I got a 20-50 bull cross. I have my 20 rising, if that's the case at that time. I have my 20 chasing my price. That's positive as well. So there are things there. But ultimately, hour and 50 minutes. If I'm the bulls, I want this to rebound as much as possible because you don't want to lose that daily 20. It's not good news. All right, so that's that. I wanted to point that out. I wanted to point out the 55 element as well. See if the 50 is any different. So I do have to bring this up. 55, 50. So remember, when we see that 50, we got to bring up that 55. They're kind of married to each other because the reality is some use one, some use the other. And the reality is on a daily scale, you have a simple 50 that has been something that was resistant. You broke off strongly. You had the big candle theory to get through, big candle back, resist it. So there's an actual argument here that, look, the dynamic support of a simple moving average 50 scale has been interactive on an interesting level. Resistance, breakthrough, fell through it, resist, test, breakthrough. And at the moment, there's still some space there. And there's areas this kind of lines up with our areas of support. So it makes sense that, hey, people can hold on to that, can hold on to the 50 simple. So I'll be watching it. Like I said, I know I told you in the beginning, guys, you're going to get a lot of information, and a lot of it's not crystal clear. And that's just the environment we're in. And if you don't see a trade, don't take one. And that's understandable, and that's fine. There's nothing wrong with that. There will be easier times than this. You know, these were easier, that was easier. If you might say, what are you talking about that was easier? Well, let me show you. Let's go to that 4 hour and talk about what happened. We talked about a little bit on Discord. I'm going to get rid of this. But what happened here? Well, basically, I might have to change my chart. Let me go to this guy right here. So I want to bring up this 4 hour that we had. And again, forgive me because I literally made 2 videos about this before. Thankfully, we spoke about it briefly on Discord. But what happened? I spoke about this right here as an exit, right? And it was premature exit, but you know, it was an exit for me. I basically, you guys can look that up on Discord. Say, you know what, good. I like this as an exit symbol on a 4 hour scale. I like that we had a cross mixed in with some divergence, where you see on the 4 hour we basically had this yellow line as the RSI showed a drop, whereas the price showed a rise, right? So you know, it was small, you know, wasn't significant. But for me, hey, that was enough for an exit. I liked it. I was glad that it gave me a clearer one. But we then got a clearer exit for anyone that didn't exit at that time, which was this right here. You basically got the breakout, right? And a lot of times this will happen with RSI and with bear divergence. And in this case, it worked out with the MACD that we utilize as well, which is this. What happened? Well, we had a run, right? Let me go back to my height right there. I'm going to use this MACD as an example. So let's just utilize from there to there. What do we know? Higher high, clearly, right? Broke through a level here, which this was a Fibonacci level that we talked about. So we got a higher high. Some might have said, hey, oh man, if I sold here, I'm out. Understandable, that's true. You would have missed out because there was another move to be made. We see the RSI broke out a little bit. But ultimately, what was created on a 4 hour scale was this. Lower high on H4, lower high before the second cross, lower high on the MACD. So we saw bear divergence, and to confirm the bear divergence, we need that positive, negative, positive. Or if it was a bear one, we would see negative, positive, negative. If you haven't learned that yet, don't worry, you'll get that in the videos. But ultimately, for you guys that have seen those already, you know what I'm talking about. Positive, negative, positive. Beautiful. That's just divergence at its finest. That is an ideal exit, and if you wanted to utilize that as part of an entrance strategy as well, perfect. You know, what would be an ideal entrance strategy? Well, you know, basically that I saw bear divergence, I saw a tight doji, right? Low volume doji. I know it was a Sunday, and you started to look at a lower time frame like the hourly. Let me go back to this 4 hour. Just kind of highlight this area. I don't want to pick another area to look like we're cherry picking or anything. If you didn't get this, don't worry. We're just going over this to say maybe next time, right? So what would someone do? Well, you know about your 4 hour divergence. So then you go to a 1 hour to see where can I get in then? Well, you can get in on a lower time frame, right? So we say, all right, well, our 4 hour is our anchor chart. That's the one that's we're taking the trade on. Excuse me, guys. But what we have here is a divergence on a higher time frame, right? Excuse me. We had the divergence on the 4-hour time frame, so we go to the lower time frame. Forgive me. We scale down to look for an entrance, right? And what do we have? We have a cross, right? Right there. Now you might say, well, that's not a second cross. It's debatable if it's a second cross or not. That's how you look at it. Remember, these low time frames can get confusing. But even if you're correct, I understand. But we have to understand what our strategies are. We're not going to be able to go to every time frame and find the exact scenario. What we know is that the 4-hour, right? Don't lose sight of this. I want to do this really slowly with you because this is important. This is big trades come from this kind of stuff, right? So I want to go ahead and highlight this exact area right there. All right, so we know the 4-hour would have been too late to wait, right? But the 4-hour initial cross is here. Bear cross mode. So you're in bear cross, right? You're waiting on a second cross. Now you can wait. It's understandable if you're taking the trade on H4. But if you're trying to take the trade on H1, what do you have to do? Remember, so this was the area. Now remember, this is on a 4-hour scale. On a 4-hour scale, this is the area where you had the first bear cross, right? So when's that second one to come in? Well, you can lower your time frame, of course, right? Always. And look for something. If you see a bear cross on the lower time frame, absolutely, that could be your entry. So you would have had an entry in this position. I'm not saying you should have. I'm not saying you failed. Don't misunderstand. We're just talking strategy, guys, right? So I'm on a 4-hour. I want to do this again slow. Rewind this, replay it, do what you need to do. This is very important strategy. 4 hours on a bear cross, right? You might say, well, what are you talking about? It bull crossed right there. Let's go and mark it where it bull crossed, right? Because this will tell us the time. And I'll say you're right. But we're looking for a second bear cross on a 4-hour because of what? Because of the fact that we had bear divergence on that scale. So if we can wait for the H4 to recross, that would be ideal if price is going to move in a nice slow manner. But we would have needed that 4-hour to hold on the top for a long time before finally breaking down, and that would have created the cross on that scale. But who's to say? Of course, guys, you know my methods, right? We scale down, right? We want to scale down for sharpness. Now, maybe we have to immediately exit. Okay, that can happen. But what's the scale down going to tell us? Cross now. This isn't, you don't have to bathe the second cross, first cross, fifth cross, ninth cross. No, you're going by the fact that you're looking for a second cross on the 4-hour. So what's going to precede that? A 1 hour, maybe even a 2 hour. Let's see if the 2 hour would have worked. I haven't even looked at it, to be honest with you. The 2 hour, I go to like a 1 hour myself because you want to scale down in that range by about 4 for your trade. But yeah, it would have been late, so which I expected ultimately. But the 1 hour, if you're in that situation, you're using a 4-hour as your anchor chart. Go down to about a 1 hour, even lower if you want. If you get that cross, okay, take a shot. Make sure other things are jiving with that, right? What does that mean? Well, basically, price was going up even on the 1 hour scale. RSI was going down. So, we have bear divergence on the 1 hour as well. Okay, good. You're not going to get the same setup. This is kind of stretching it. You're not going to get that same positive, negative, positive because that existed on the 4-hour. So it's not supposed to exist on the 1 hour when you're talking MACD because that's involving moving averages and periods of 26, things of that nature. So that's a more complicated conversation we can have later. But the idea here is this. The 1 hour still gives you that bear divergence here, right? You could see that the RSI is breaking down a little bit, and you got plenty of opportunities, even losing, significant lower lows on the RSI all before this dump, right? So there's a play there. Now, I'm not saying you should have did that. What we do know is this. The exit was clear. So if you got caught in this, well, the signs were clear to get out of a long, and in my opinion, that happened even a day or two before. But they gave you the real clear bear divergence to get out, which ultimately, that's all we can ask for. Even if you missed it, don't worry. Now you can learn it, see it, say, you know what, I missed it. Next time, as long as I get something like that, I can be pretty happy with that, and that's a positive. But we want to talk about that and identify and see it because we can say, hey, look, technical analysis did give us that. So that's a good thing. Now, the other question which everyone wants to know is, well, how could I have participated in this? And there was a way. And that would have been saying, all right, well, I'm taking the 4-hour as an exit, right? I'm repeating it because I want it to be clear. Yes, I'm taking the 4-hour as an exit. So therefore, the 1 hour would be my entrance if I was going to flip from short to long. because you're not going to go from a 4-hour long to a 4-hour short. That doesn't make sense. That means you're not doing proper analysis. We have to scale down. So that will start on a lower time frame. Now you might not like that. You might not want to trade on those time frames. Well, then maybe you sit that trade out. But ultimately, that's what it is. You're going to have to start that trade on a 1 hour, on a 15-minute, because things in crypto, they're moving quicker than ever in shorter time frames. But there was clearly an entrance on the lower time frame. By the way, I didn't do it. I wasn't on Sunday hanging out, looking at crypto charts. It just wasn't. I refused to be honest with you. I'll look at Sunday night, 7 o'clock, which is where the week starts for me. But ultimately, prior to that, the very rare occasion that I'm going to be doing that, because I love my wife and I don't want to get divorced, and that's exactly what would happen. But if you had the capability of watching and you like to trade on the weekends, more power to you. There's been a lot of opportunities on the weekends that I have to acknowledge. I mean, that's been happening, and that's reality. But this is how the trade would work, and if you want me to do more of this, I can. I'm happy to do it, but that's exactly how the trade setup would have worked, and it would have been gold, right? We can see that. That was a beautiful setup. I mean, I see something like that, I wish I would have gotten it. You could have entered in this position and put yourself in a position to where, even if your target was, you probably wouldn't have targeted this kind of drop, but ultimately you end up getting a 10% drop, and happened so quick, unless you had a stop in there, you probably would have caught it, which would be a thing of beauty. But anyway, that's how that would have worked. Now let's just get back into where we're at in terms of analysis, and we'll switch back to this chart again and look at where we're at on the 4 hour. Now, that once that happened, very bearish, obviously, but we have the reality of this. As long as you hold that, that's support. Now, this is a secondary support in there. I mean, when you look on a higher time frame, if I change that to a daily, it becomes more clear. You could identify even this on a daily scale, which would be that little candle, that little indecision candle right there, where basically things couldn't move, and then once it climbed above it, see you later. I might combine these two, right? So I'll get rid of that. So if I want to use a daily scale on my 4 hour, I might look at something like that and say, hey, I have a lot of things lining up here. I got the 50 moving average on a daily scale. It's simple. I have this level of support. I have this little geometrical trend line that's a possibility at some point. Some bulls have some things. Is it enough to take longs? I don't know. Ultimately, I don't like to. I'm not the guy that's like, hey, I'm gonna catch this. Sometimes I do it, but there's usually much more reason, and we'll learn those things later as to why I might be looking to do something like that. But I don't prefer to catch like that. I like my catches. Let's look at a short opportunity. I want my catch to be something along the lines of, all right, here we are. I'm expecting a lower high. I see this as resistance. This is an example, but if I had this area targeted, I might put an order in and say, all right, look, if we make a run for this high, then I have a position to fill here, and it gets filled, and I like to get those type where basically things are already progressing in my direction. So same thing on a long. I don't necessarily want to catch it unless I have some other reasons to do so. On a lower time frame, it's giving me a reason to do it, even if sometimes that could be like a, let's just say this was a trend line. I'm going to draw you something that doesn't exist so that this is make-believe town. But let's just say that this pivot here was this. Let's say it pivoted here, and I had a 1 touch, a 2 touch, a 3 touch, this, something like that. So let's say this was the bottom at 1, 2, 3, 4, and I'm saying, you know what? I don't mind taking a shot, because to get to this level, it would take a healthy drop. That would mean extended momentum. I believe the momentum's already extended, and therefore I don't see it just bursting through. I would see it as being tired. Then maybe I would take a catch along type scenario in that situation. But usually I want market structure on some time frame, even if I got to go down to a 15-minute, which I hate to do it, right? But let's say I seen a reason on the hourly, and then I could say, all right, well, look, on this 15-minute, the market structure is showing me some things. Okay, on the 30-minute, the market structure is starting to show me some things, a couple series of higher lows, etc. Then that could be a scenario to where I could say, all right, I can make sense of it on some time frame, and I'm okay now with taking a position. I like it that way. Of course, we're in a bear market, so you're not going to get that fortunate. But the other thing is, what I don't want is to be in a long, and I kind of expressed this in the other video that basically I made when we were here, and here. But this gets back to this argument about stochastic, right? So if I'm on a 4 hour chart, right there, which is this period, Do I want to be in a long during this time? You know, you can come up with good reasons to be in a long. The reason I don't want to be doesn't mean it can't run. No, it's not that. It's just that I don't want to sit through a reset. I told you I would talk about this a little bit more, and I want to talk about that right here. So what happened? This is our 80 line. This is our 20 line. So if I lose that 80 to the downside, we could see here a good example that it lost it. Nothing happened really. I mean, I guess you had this little wick, but nothing too damaging would have occurred, as you could see if you held all the way through. And in fact, as I mentioned, once you go back up to the north through that, then that could be very bullish, right? You see a little jolt right there. But it's dangerous, and I'm going to go back in time on this 4-hour and find you some examples of the danger that lies ahead, because for what I just showed you was, hey, there was a reset there, nothing happened, right? But then what occurs? You get this reset, and it's terrible, right? Now this reset to the upside, nothing happens. This reset to the downside, nothing happens, right? But now, this next reset where you got a failure, ooh, we had a drop. And now we're in a danger zone. This is dangerous. Yeah, sure, it could catch here, but it could also fall through. So that's realistic. I don't want to hold longs through a reset. I can risk my money in different ways that are much more advantageous in my opinion. So that's the idea that I'm looking for, and I want to kind of express to you guys that, hey, I'm not sitting through those resets. You know, I'd much rather be in a position to where I say, hey, you know what? Now we're resetting to the upside. So, you know, if I find a reason to be long on some sort of support, there's a reset to the upside. As long as that's continuing, I'll wait it out on a long in that situation. But why would I sit through any of this when we're in a gigantic bear market? We're outside the price action channel on the monthly, right? So I want to be in a situation where my 4-hour time period is resetting? No way, I just can't. Even if we took off and I missed it, I'm okay with that. I'm just in a situation where I don't want to sit through these resets, right? So same thing here. What do you get? Burst up, right? If you had it, great. Do I want to be involved in this reset? No. Look at this. Now, once it recrossed, now you could have got a couple head fakes. One way to wait, you know, you could wait until it gets past that 30, 40, 50. I'm not trying to teach this today. I'm just kind of making a point that you notice that more often than not, it's got to get past that 50 line before it's making much of an advance again anyway, which is, of course, what happens there and on many other occasions. But what happens when you have these major dumps is always, of course, the resets. I mean, that's always what's going to occur. What? Reset. See this? Reset, right? It stays in the reset, never recovers over 80, right? Until here, right? And then still, it'll, you know, another form of that reset, just dropping under that 80 line. Then, look, what happens? This is the one that I told you about. Sometimes you lose it and then you gain it again. Very bullish. I mean, that's a huge move, right? So, yeah, that you like to kind of play if you can. But what you would do is you get that and you go back to the lower time frame and keep an eye on it there so you don't get caught in trouble. But anyway, I've gone long enough. The idea was to try to keep this short. I probably tripled the time that I wanted to. But you can see where we're at. My opinion is this. Don't sit through a reset in a massive bear market. Things are not clear. They're just not. I can see on higher time frame there's ideas here where we could still go higher, at least test this range again, etc. And at the same time, you know, if you see a play on a lower time frame, just be a little bit wise with this idea of a reset, as I mentioned. Have a couple reasons for it, and if you want to play along on a lower time frame, then do that, but don't let it reset on you, right? So if you're on that hourly, you know, if you're 4 hours while you're taking it and the hourly's resetting, it's just not worth it. What do I mean by that? So here we are. Here's an hourly scale. So if you found some reason to be long, and then you know, what would you have waited for? If you let's say you found the reason here, okay? What are we waiting for? Are we waiting for a recross of the 80 line? You can do that too, but you certainly don't want to be falling, right? You don't want to be under 80 and falling. So even if you played it in here, it didn't work. The moment you started seeing that fall again, you were out, and you would have missed a lot of that damage, and that was damaging, right? That was a pretty healthy drop, several percentage. So that's all I'm saying, is just watch the resets in a bear market and have a good reason. And ultimately, you want to have a real reason for being long in a bear market. It can work wonderfully, so I'm not trying to discourage you. I'm just trying to make that point that you want to be on the right time frame. What's the right time frame? The right time frame is being able to identify a higher time frame, like a 4 hour, right? That is already somewhat bullish, that can now match your 1 hour. And if that doesn't work, then unfortunately you might have to find a 1 hour that has some element of bullishness to it. And then you might have to, let's say, you say, well, you know, I like this cross. Okay, you like that cross. Unfortunately, you liking that cross right here now, you got to go down to a 15-minute, right? and find a reason now on the 15-minute chart to find an entry, which could occur. You know, maybe this folds down a little bit here. You like the RSI pops a little bit. You get a recross on the MACD, whatever indicator you like to use, whatever system you like to use. Maybe find a higher high. That's all okay. And then you'll just keep checking your 1 hour. Hey, am I still crossed on my MACD? I am. Okay. I'm still bullish here. Okay, that's a good way to play it, guys. You're saying, hey, I'm on some elements of support. My 15-minute. You just got to know that my trade's happening on the 15-minute. And I can't let my 15-minute now completely reset and live down here while I watch and hope, hey, I hope it doesn't do this. Because if it's down here, this is a very real possibility. Alright, that's it, guys. Hope all is doing well. Several videos coming this week, unless I have some other massive issues. But I think I've corrected a lot of those, so we shouldn't have a problem. We'll talk soon.